someone who wants to invest in your deals, they want to look at it. They want to say, hey, Lame, I have some money to invest into real estate. Why would they do it with you compared to doing it themselves, doing it with someone else, doing it with a private equity firm? What's your slide edge?
That's a great question. So, and over the years, we've really niched down on like who we're serving from an investor perspective. Because originally, I don't think I knew that. Like, I think originally when I was first doing these deals, I was really just looking for a capital investor. But our value proposition to the market has actually allowed us to understand very clearly who it is that we're serving, which is really important, right? Because when I am approaching somebody or when I'm talking about my business, really I'm not trying to sell everybody. I'm now trying to speak to a very specific person. And in my model, that very specific person is somebody that in nature doesn't want to manage or do all the nuances of a short-term rental, which is a lot. Right?
Okay.
Cleaning, like maintenance, dealing with guest communication. Right away, we are looking for people that do not want to do that because it is a full-time job, right?
Yeah.
Secondly, the second characteristic that we found that is our ideal avatar is the benefit at which they're taking. And our deals give really three very clear benefits. One of them is priority over the rest because of how we structure the deal.
Okay.
But the three benefits that our deal give is depreciation against your income, so tax savings. That's first and foremost.
That was my favorite. That's why I did it in the first place.
And that's like the majority of ours. So people that are high income earners, W-2, whatever, they want to offset.
Sure.
We can help them do that through strategic ways of investing in a short-term rental.
Cool.
The second is passive cash flow. So cash flow that they're getting, it's mailbox money. It's consistent. They know what to expect. And then the third is appreciation. So there's some equity involved in our deals to where people will see and realize that as the market grows, right? Cool. And so in our deals, I'd say the biggest benefit for us versus doing it with any way is we can make it very passive. We can still allow them to take the full benefit of the asset through a very strategic means of what they do and how we operate. And then the third is that they can take part as any investor without taking on all the nuances of being a full-time investor, right? And so that's kind of been our middle ground. Now, the way that we find our deals and the way that we can create these margins is specifically how we acquire the property.
Cool.
And that's the big deal. People have heard Pace Morby, Chris Prefontaine. These are some of my mentors who have helped me understand how to buy properties today at half the market interest rate, right? We just closed on a property in Austin. It's 4% interest rate. If I were to buy that traditionally, you're double, right? And we put less than 7% down on that property. If I'm buying that traditionally, I'm putting 20% down and I'm at 7% interest rate.
Wow. Right? Wow. Big difference there. Cool.
Big difference. And so we're able to buy the property in a very creative way, which gives us terms that are not normally available to people through traditional means. And then our exit is the highest grossing exit that you can potentially have, especially on a residential unit, which is short-term rentals, Airbnb, right?
Gotcha.
And so combining those two worlds is essentially how we've been able to build our business. And luckily those worlds, one of them specifically being short-term rentals, also provide a lot of unique tax strategies, hence why our key avatar is people that need tax benefit. And so being able to operate those two worlds, combine them, and then understand who we're serving and the benefit that is most valuable to the people we're serving has been key to our business. And Todd Peterson says it best, right? Your number one priority always is your employees to be able to create and serve an incredible product. And a very close second is the customer.
Yeah.
And being able to identify those, what we do as employees and as a company clearly, and then who we serve very clearly. We've been able to identify those two, and that's what's helped us grow really fast.
I mean, you saying that, I was the ideal candidate at that point. Yeah. It was like the business was making a certain amount per hour, where me going out and trying to find a deal on my own was nowhere near that dollar amount, accumulative. And then even the tax benefit I would get on my own wasn't even close to what I could get through something like that. And then the afterward effect of having to manage something, again, just all that time I could put into my business, which would make me more money, and leave that to you, give me my tax benefit, save me my money that I've earned in my business to keep building the business, and then get almost like a deal half off tax-wise kind of thing.
And again, it's because we understand too how that you value your time, right?
Yeah.
I'd say the biggest benefit that we give people back, which is the most valuable asset above and beyond taxes, is time.
Yeah.
We're saving you time. You don't have to do it yourself.
Once you're at that point where your time is that valuable, like you were saying, right?
Yeah, exactly.
And so with that, like, share, correct me if I'm wrong, you have over 100 deals, or how many are you at right now? Do you know
honestly,
roughly?
I don't even know the number. I mean,
Double,
in terms of
triple
doors,
digits?
I know we're over 150 in terms of doors.
Wow. Okay. Cool.
So,
that's crazy.
Just in this quarter, we've placed close to 10 million, and so
in this quarter,
mm-hmm.
last 3 months, holy crap!
This quarter has been our best quarter by far in company history, and so
we've
acquired about $10 million of real estate. So
wow,
so
that's sick,
fun,
man.
Yeah, so
that's really cool. And what do you think for someone who's looking at your deals, like what trust can they find in your deals when you do Airbnb that well? Like why would they want you to do Airbnb for them, to manage their property, to find their deal for them? I guess almost like in a credibility sense.
Yeah, really good question. I think the important thing to always evaluate in any investment is your risk, right? Like, what is your ideally worst case scenario, right? And that's something I always talk through with my investors. The way in which we acquire allows us to be a bet that's hedged very well. And the reason for that is because we have a lot of deals. In fact, the majority of our deals, 80, not all of them, but about 80% of our deals, when we negotiate terms, we're keeping in mind long-term rents. And so a lot of the deals that we buy, worst case scenario, let's say Airbnb was made illegal across the entire United States, for 80% of our portfolio, they actually would still cash flow. So we could put long-term in there and they'd still cash flow. They wouldn't cash flow a lot. Right?
Sure.
And but
you don't lose.
Exactly. But you're not losing the asset, right? And so a lot of people are like, well, our worst case scenario is the house, you lose the house, this, that, the other. And honestly, in a lot of our deals, that's not actually a realistic worst case scenario, because we could always put a long term in there. And then eventually, we know historically that real estate always appreciates. And so now, given the nature of the investment, obviously we're trying to meet timelines of 5 to 10 years to give people a return on their capital. And so there is a timeline that we're looking at that we're trying to meet to make sure investors are happy. But in a worst case scenario, it's not that they lose their investment. It's just that we can't pay them back as quickly as we thought, right? And so we just have to wait a little bit longer. With that being said, obviously the best case scenario and the most ideal scenario is that the property does exactly what we anticipate it'll do based on a series of comps. On average, we're pulling anywhere between 10 to 20 comps per property that we're looking at. And we're underwriting it, keeping in mind the investor's return, right? Their interest return that they're making on the property. And so there's a lot of semantics in terms of our underwriting that we're looking at to make sure that a deal is a good deal. And granted, the other side of this that's it's important for people to know is that in real estate it's an industry that's so volatile based on the economy, right? And so what I will say and can say and feel confident saying is that the last 2 years have been the worst.
Oh, really?
And I hope that, and even in the worst, I still see, we still have properties that are very profitable. We still are winning, but in that, I think with Trump being in office and where the economy has been and where it's going, I think real estate is a really good thing to invest in the micro of what you would typically look at real estate. If you're looking at real estate in 30 years, you're never going to lose.
Sure.
If you're looking at 5 to 10 years, you got to be careful, And so, but I do think we're at a point in the market where things are looking really, really good. So
yeah, I mean that when Brady talked about you, I came to him and I was like, hey Brady, I want to invest. I have a tax problem. Give me a solution. And he's like, well, I'm Kinikini. And I was like, I don't know who this guy is. That's a long name. Like, how do I find this guy? But he said your name like 5 or 6 times, and I'm like, all right. I'm like, just give me this guy's number, and I'll talk to him, and I'll see what he's about. And we had met and chatted, me, you, and Christian, my brother.
Yeah.
And the first thing was just the energy. Is obviously you got to connect with the person, the jockey over the horse kind of thing.
Absolutely.
But ultimately, I just from your experience from sales to that, and then how many homes you have done shows every single time. And when all those wins that were stacking up in your favor, I wanted to be in that stack. So